Hello guys, welcome back to my channel. Don't forget to like, share, comment, and subscribe the channel. Singapore core CPI inflation rises more than expected in August. Investing.com. Singapore inflation rose more than expected in August. Data showed on Friday as the island state continues to struggle with more expensive commodity imports and rising food prices. The Core Consumer Price Index (CPI), the preferred inflation gauge of the Monetary Authority of Singapore or MAS, grew at an annualized rate of 5.1% in August, more than expectation for an increase of 5% and above July's reading of 4.80%, including volatile items such as accommodation and private transport. Singapore's CPI inflation rose 7.5% in August, more than expectation of 7.2% and above last month's reading of 7.0%. Food and transport costs were the biggest contributors to price pressures in August, given that the island state imports almost all of this fuel and grain. The readings lend further credence to the view that the MAS is likely to tighten monetary policy further when it meets in October. The central bank forecasts core CPI to end the year between 3% and 4%, while overall inflation will trend between 5 point and 6 point. Singapore was hit hard by rising commodity prices this year, given the city's large dependence on imports. The MAS said that his trend is likely to continue due to increasing inflation in most of its trading partners. The recovery in domestic demand in some regional economies as COVID-19 restrictions are eased could lead to higher inflation in these economies. Hinge upward pressures on Singapore's import prices could persist. The MIS said in a statement, strength in Singapore's labor market and wage has also kept spending upbeat in the country, which has in turn pushed prices upwards. The outlook for the Southeast Asian financial hub has worsened this year, largely in part due to heightened commodity imports. Economic weakness in China, the country's largest trading partner, has also weighed on expectation for local growth. The MAS tightened policy three times this year and is likely to continue doing so to offset increased inflationary pressures. But a separate reading showed that Singapore's industrial production recovered sharply in August, indicating that some facets of the economy remained steady despite price pressures. Singapore's key consumer price gauge rose again in August at its fastest pace in more than 13 years. Official data showed on Friday, driving market expectation the central bank will consider another policy tightening move next month. The rise in inflation was mainly due to larger increases in the prices of service and food. The Monetary Authority of Singapore (MAS) and the Ministry of Trade and Industry said in a statement. The core inflation rate, the central bank's favorite price measure, rose to 5.1% in August on a year-on-year basis. Reuters poll of economists had forecast a 5% increases. Headline inflation rose to 7.5%, beating economists' forecast of 7.2%. Singapore's monthly inflation rate has remained elevated in recent months, and economists widely expect MAS to tighten policy at its scheduled review next month. Despite weak economic growth, MAS will be forced by the continued upward trend in inflation to tighten in October, My Bank Kim and economist Lee Juye said after the August data. The core and headline inflation rates were 4.8% and 7% respectively in July. Singapore's central bank has tightened in monetary policy three times here, twice in surprise moves in January and July. Okay, that's all from me. Thank you for watching. Don't forget to like, share, comment, and subscribe. Thank you.